Welcome to the Investor Impact, PowerTalks with Vinney Chopra, where investors gather to share their insights and strategies in the world of multifamily, real estate, and beyond. Get ready to be inspired and equipped for your next level of success.
All right, all right. Good afternoon, good evening. I'm really excited to be back in the home office, and we leave again actually on Friday. Some of the brokers have put together some deals for Monica and I to see in Scottsdale area. Like I was mentioning before, we'll discuss that. But let's go ahead and see the our thing. What is it? Our attorneys ask us to do. Make sure that we are covering that right there. Do you see just the PowerPoint or
Yeah.
oh my gosh, what happened to the PowerPoint here? Come on, Vinod. Okay, there. You just see the office, my desktop or just the PowerPoint?
Just a PowerPoint. Just PowerPoint.
Just the PowerPoint, I think, because I clicked on that, even though my desktop has more stuff in it. Let's just go ahead and do it very quickly. Again, welcome to our weekly Inner Circle Mastermind slideshow. There we go, right there. There we go. That's better. I think now you can see it. You know that myself and Dave, thank you so much for helping to continue. Really appreciate your efforts. Again, disclaimer is that it's for educational purposes, entertainment purposes only. And we talk about all kind of things about multifamily, commercial, hotels, senior livings, syndications, franchising, all that stuff is for entertainment, educational purposes. And please consult with your legal help and accounting and investment advice. If we don't give that, please consult with the professionals. And then we believe that the information we present from different sources is accurate and reliable, but we don't represent and make no warranties expressed or implied as to the accuracy of such information. Please consult with your own attorney, advisor, financial advisor, CPA for legal matters and all. I don't know what's next over here. Let's check it. Oh, wow. Oh, it doesn't want to go. Oh, yeah, there we go. Again, positivity, all that. And brother, oh, Daryl is coming in. I'll let him in. Confidence, happiness, enthusiasm, motivation, belief, inspiration, all the good stuff, abundance mindset. And actually, brother Stephen and I went through that. Very nice, Steve. We are putting together like a workbook and a course for you. It's and the name is amazing name. I can't take credit for it. Stephen, it's called Babies to Business.
Babies to
That's the
business.
name. Huh?
Yeah,
Yeah,
babies to business.
Babies to Business. And very catchy name. And we were doing $7 in 7 minutes, like the whole work about how to mindset, how to change, how to do all these different things and become better entrepreneurs. It's exciting. Module one, I read through all that, and we should be able to go publishing on that one. We have four modules.
Cool.
We have
Yeah.
four modules total. But that'll be exciting. We'll share that with you. And if you would even help, if you have some young youth in the sense of what age group we are saying
Well,
college. Hmm?
we were saying college, but I just went to Chamber of Commerce this morning, and they actually had a group of kids that are in an entrepreneur school that Mark Cuban actually visited a couple of years ago at Louisville. It was
Oh,
terrible. They totally blew it on their 30-second presentation. There's so much room for growth. I didn't
mhm.
say that, of course, but
Yeah.
I was sitting there going, okay, let's see. And it was the one group of kids that
Hmm.
actually told the story that started getting me motivated.
Oh,
And
wow.
but
Wow.
everybody else was, this is where we're selling, this is what it costs, this is how much it costs, this is
Ah,
oh
okay.
no.
Okay.
And I was looking through their stuff. They help them, but every one of the mentors that was there was another kid.
Ah, wow. Wow.
So because I would go to the group, there were six of them, and I would say, all right, so which group is this? Because I had notes on each one, right?
Hmm.
You'd
Hmm.
say which one, and then I thought they were each time it was a kid that said they're the ones, and so
I'll
they
be
were the
darned.
mentors,
I'll
and I'm
be
sitting there
darned.
going, Oh my
Yeah,
God.
hopefully we can make an impact in
Oh,
their
it'll make a
think.
huge impact. And so the marketing director for the Louisville school system was there. The person that works with these kids was there. I got their information. There's three major players that were there for the school system, so I got all their information. And
Marvelous, marvelous. As we get into the digital fill in the blanks and first module, maybe even we could get some feedback from some youth. Well, we can talk about it. But
yeah, absolutely.
alrighty, so let's talk about, oh my gosh, what's on the back there?
Oh,
Did
it's
you
my
see that? That's your cat.
Maine
Okay.
Coon. Yes, he's
Dave, Dave, I'll give the stage to you, brother. What's happening? Yeah, yeah.
no. Go ahead, Dave.
I was trying to unmute there. I couldn't get to the button. Lots of interesting things. I've been on this journey that kind of pairing real estate acquisitions with businesses, but
Yeah.
I've had like just in the last couple of weeks, 2 deals at the finish line, and both one I got outbid, the other one, the best thing, the owner got a cash offer, and I had just 2 deals recently.
Oh,
But
wow.
at least I'm getting some. The thing is, at least right now, there's some deals that I'm getting closer on. But I'm finding that there are a lot of business owners that are retiring, and so I'm widening the net to some of the businesses that I've been in, from manufacturing to sales and marketing companies. And by going after companies like that have real estate, what I'm looking for is buy larger commercial assets that are owned by a business owner that's looking to retire. Instead of just going after the real estate, buying the business, then using the real estate as the financing component to buy the business, then sell the business off and keep the real
Ah,
estate.
got it, got
But
it.
it's a different way to go about syndication. But because you're still going to have to raise money for the real estate acquisition. But a lot of times you can, well, the winery that I almost bought in Washington State, we had it under contract for 4.5, not under contract. We had it under LOI, 4.5 million with $500,000 of financing. So it really wasn't, but it was going in, it was about 6.75. So I was going to be able to finance 100% of the 4.5 million. But then somebody came in with a 5 million all cash offer and they sold it.
Oh my gosh. Wow, wow.
But hey,
And
that's,
it was a winery it was already operating winery.
oh yeah, it's been very successful. They have 100,000 visitors a year. It wasn't a vineyard. It was just strictly a winery. And what appealed to me about it was they found that they could be a lot more profitable not making their own wine. So over the past 3 years, but the guy had health problems, and that's why he's retiring. The past 3 years, their profits have been going way up. On a $4.5 million acquisition, they were making $900,000 a year in net profit. And when you look at that, we were looking at going in, not pro forma cap rate. When you go in and you're going to make, 35% cash on cash the first year, you can't get those kind of
not at all.
in multifamily. You can if you do stabilization. And so that's the other thing is I've been behind the steering wheel of my car a lot, and I'm looking for not necessarily, I'm open to multifamily, but I'm also looking for warehouses where they're vacant and then go after so I'm driving around in tertiary areas looking for more assets that are off market, because I think right now that might be the market that you can find something.
Good. Wow. No, that's very exciting. I know. So this was in Washington, this winery, and how did it come about?
Well, that was a broker deal. And so Encore and I have been working deals together. And Sarab asked, should we offer more? But what I'm not going to do to answer the question.
Oh, I see. Yeah.
I was in the chat. I wasn't going to get into a bidding deal because nobody wins that. I figure, okay, so I knew who was buying it. It was a restaurant owner. They own 10 like barbecue type restaurants. And I don't know if they'll be able to get financing. The restaurant business is a very tough business. And so even though they said they were coming with a cash offer, they're still going to look to borrow money. Restaurants didn't do very well in 2020 and 2021.
Mm.
And as they started to come out in 2022, they were doing better, but that could be an issue for them. So that's why I didn't bid it up, Sarab, is because I felt like maybe I ought to
They
just,
might have gone higher than what you're saying, right?
oh yeah,
If they, yeah, yeah.
because it was a good deal at 5 million. At 5.5, it was still a good deal, but then I would have had to raise money. So this was a
Yeah.
deal where I wasn't going to have to raise money. So
Sure.
Encore and I were going to stay in the deal, and
Mhm.
I
but
thought this was the deal where you actually did do you had 300 people come and you had.
yeah, but we were going to, but we just did a joint venture. It was going to be a joint venture. We raised the money,
Mhm.
but it was just, it ended up being a joint venture. So we had
Yeah.
basically a lender and a partner so it was
I see.
basically it was a three-way partnership, basically.
Three-way. Very simple. Mhm. Wow. Hey, this way you probably know now ins and outs of that side of the business, and it's quite possible to have stumbled into. Have you looked into Google search even like a winery on
Well,
sale?
if it was a conventional like vineyard and winery, I wasn't as excited about it because I'm good at taking a product that
Mhm.
someone else makes, personally, and all we would be doing is sales and marketing of that product. That's
Mhm.
very different than owning a winery and having
Totally.
a professional wine guy. I don't even know what
Yeah.
they are. Yeah, I didn't want to be like in that business. That's why
Operator. Yeah.
it was a unique business that I liked
Mm.
because it wasn't your typical winery. So
Sure. They would get the grapes from the local growers and then put them and crush and everything. Yeah. Yeah.
they did that for a while, but then they found a winery that was about 3 hours from them. This guy, he's an expert, I guess you'd say, mixer. He makes
Mm-hmm. Mm-hmm.
these great wines, and they could buy it in barrels from him. So all they
Oh,
were technically doing is just those
packaging
barrels.
it.
Yeah, red wine
Yeah.
sits
And
for 2 years, and white sits for 1 year, and then they just fill bottles and they
bottle.
cap it. Yeah, but they were selling 5,000 cases a year. It was a really cool business. And the real estate play on it, because they had so many visitors, we were going to
Mhm.
build Airbnbs on the site.
Mhm.
And so it was just a unique asset. But
Yep. Yep. That's all
and
right.
yeah,
Something more will come like that. It
always,
might. Yeah, always.
always.
I believe that definitely. Actually, when was that? 3, 4 years back. Four? No, maybe before COVID. One of my investors, she called me, and there was a winery right here, right here in our backyard. Daryl lives very close to me in Livermore.
Right.
Livermore.
Right.
Yeah, and it was a meeting place and everything. I remember, but then we somehow walked away. We said, no, this may not work. But it's great to see all different opportunities are there. Don't open your site to anything. No, that's very good. So, what other things are going on? So, I know you asked me if I could come on the meetup group. Share with us. So, you started a meetup group. Share with us how you got going, and did you have to promote, and how did it work?
Yeah, so I have a meetup scheduled in a couple of hours. It's at
Okay.
6:30 and it's in San Francisco. I think I sent out Daryl an invite as well. Uh,
Oh, okay.
yeah,
Uh-huh.
like whoever can join, please feel free to join. And then I think 35, 35 to 40 RSVPs are there right now. So I'm just gonna
Okay.
go and meet with all these people and talk real estate with them. So
Good for you. Good for you. I'll put you in touch with Brenda Chang. She was the VP with one of the companies, Conventus. I remember they gave me 8.5 million loan that I needed. Daryl probably knows for the Atlanta property. I
Right.
got the loan in 15 days, and Boeck's team closed it from start A to B, hard money loan. It was from Conventus. So she also has a real estate group there. I'll
yeah,
put you together. Maybe there could be some cross pollination.
I've spoken with Brenda a few times. I've met with
Oh,
her as
you
well.
have? Hold
Yes.
on. Okay,
Uh,
okay, yeah.
Yeah,
Good,
I
good,
think
good.
she's recently moved to New York, but
She did. Okay,
yeah,
okay. I didn't know that. All righty. Oh,
Yeah,
good,
but I know
good.
she's into like hard money lending in
Perfect. So you're doing physical one, seems like this one, but then maybe online also. I know Dave is very good at it. Dave, you did that over there, right? You changed the name of it or something, I remember. No, you were putting it more towards the local area name in
Well,
there.
yeah, so I have the Jacksonville Multifamily Investor Network and the North Florida Real Estate Investor Association. And the multifamily, because it had Jacksonville, I got better traction. And we meet the second Tuesday of every month, and we run about 20 to 25 people. I probably could put a little more effort into it to make it better, but I'm I think when I say make it better, I'd like to attract more investors to the group.
That's the key. That is the real key. Lots of time people show up, they want to learn a little bit about it. But I think having investors who want to know more passively how to invest,
That's
I
what I
think
mean, passive
that,
investors,
yeah,
because
passive
we do have
investors.
quite a few investors that show up, and I have met some investors. I met one guy who was from Brazil. He took the first ride up with Bitcoin, and he
Oh,
retired. He
oh,
retired.
wow.
Yeah,
Wow.
he got off the train, and he had done really well. He said he invested about 100,000 on the first ride up, and it became worth tens of millions. And then he sold, and
Wow.
then him and his wife came to move to North Florida, and that's all he's doing now is investing. Which
Wow.
and the 100,000, that's a good ride. I'm curious, Vinny, how is
Yeah.
now your Bitcoin mining business? How is that going?
I remember when we presented it, it was 13,000 to mine one Bitcoin, right?
Yeah.
And now the price is 65,000. Gosh. So, of course, when we mined it, now it did go to 22,000. I thought construction, the costs went up. Then also there was some consolidation, to be truthful. And then Neil, our son, is very much on top. He said that I think maybe end of March, the fee that was splitting is going to be 50% less now.
Oh wow.
Wow. Yeah, 50% less. So what that means is the Bitcoin mining, even though we say that they were able to mine at certain price, it may double because now what I understood was if you follow the system and you find these, what you call it, calculations, something like a puzzle, then everybody who is operating, they would divide up the, let's say that, right? So many bitcoins were given to them, but it's after so many years, maybe I may be wrong, it is going to cut in half, then half. So it's going to become, because a lot more, it's 21 million total bitcoins, but out of that, only 19 million or 17 million, the rest are lost. I think what I understand. I don't know too much about.
Very
Please.
for mining. You are in a mining business or Bitcoins?
Yeah, I was. I
Is it
just raised
available?
some money. Yeah.
Okay.
Huh?
If I bet $1,000, do you get weekly profits or monthly or
Oh
how do you do
no,
that?
it was like you could go monthly, and
Okay.
in the early part, I remember 2 years back or so when I did this, 3 years back, 2020, 2021 maybe, whatever. But they were paying us monthly. I'm not the operator, but I linked up with somebody. They were paying 2%, 2.5% per month. I remember, and you could take it in cash or Bitcoin in the
So
wallet.
if I bet 10,000, what do I expect a month? About what?
Okay, no, not
Twenty.
I'm not doing
Uh,
it now, but at
oh,
that time, yeah, 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 yeah,
at that
yeah,
time. Okay.
yeah, 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 at
All right.
that time.
A lot of
Yeah.
people are doing mining. We
It's a very difficult business because I remember with COVID happening, then because these miners are all over the world, by the way, right? They are
yeah.
doing it. And the biggest cost is the machines, the computers, supercomputers, they call them, and the energy cost because you got to be very close to the source of energy, whether it's hydraulic energy or wind energy or it's a power plant. So you have to almost build a site very close to the origination of the energy power so that these bitcoins and then the heat, because they run 24 hours from what I can tell, they should be in a cooler place also. So a lot of bitcoining is done. I was told Sweden, up there in the north, cold places like that. But
Are they reliable incomes? I'm doing one too right now.
oh, you are? Okay, I
Yeah.
know. I remember some people used to have these machines in their home, by the way. I remember somebody even in Denver asked me if they could make, I would invest and they'll do anyway. But I'm a little bit out of it because it's a very risky business and now it's
Very,
65.
yes.
Yeah, I
Very
know
risky.
it
You could
hit
lose
the
your money.
60. Yeah, 68,000 was the, I think, the peak from what I understand. 65 was before. Today it was 66,000 actually. It had a rough day, up and down day. And
Right.
Ethereum, yeah, yeah, yeah.
Yeah, some of them they want you to put money weekly.
Oh, I see, I
Uh,
see.
yeah, and then your income goes really high.
I see. Risk is there too. I always find when
Risky,
there are
yes.
higher risk, higher rewards. I
Yeah.
feel that way. Yeah. Yeah. No, ATMs. I don't know if anybody has heard about ATMs, machines, which are
No.
again another business. Dave Zook is the guy. I'm not promoting his business at all. I just want to share if anybody wants to know. Oh, I'll just close this up over here. Sorry.
Yeah.
How do I turn this out? Huh, this is okay. Maybe like that. Yeah, yeah. Okay, now I can do it. So Dave Zook is the guy. Do you know also Dave?
No,
Dave
I
Melvin
don't know
also.
him. No, I
Okay,
don't know
okay.
him.
Yeah, I invested with him and I'm getting good returns. But the only thing is that there is zero upside to it, like Dave Zook. Again, I'm not promoting, I'm just sharing, Zook, ATMs, ATMs. If we just do
So
that,
what
hmm?
is that? What is
Oh,
that
yeah,
like? Yeah.
essentially it's a, oh, yeah, that's him. That's him. He's
Mm.
founded the real asset, blah, 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 blah. But oh, wow. Okay. There are a lot of people in there, portfolio manager and all. So essentially, it used to say that it's the portfolio. Let's look at that. Oh, he's got car washes. There we go. I just saw it. So he's into car wash too, self storage, ATMs. That's the one somebody shared with me. And I said, okay, and strong monthly cash flow, real asset ownership, recession resistant, aggressive tax benefits, things like that. Essentially, these are machines which give out, of course, ATMs like that, and then diversify with revenue streams like that. Passive cash flow. I just wanted to share that because we are talking about diversification. Don't promote anything like that. So let's talk about what should we talk about today? What would
I
be
actually have a
ideal?
very interesting subject. I've been waiting for you to get back.
Please. Yes, yes.
I
Uh-huh.
wanted all the people here on this one. I've been talking with someone, and it sounds weird at first, that pays you to borrow their money.
Pays you
Yeah.
to
So
borrow their
let's say
money,
that
you get a commission or something.
you get, let's say let's say that you raised, okay, Dave, how much did you raise those investors?
It would have been 4.5 million.
Okay,
Four
four
and a
and a half
half.
million. Okay, 4.5 million. So for 2 to 5 million, they pay you 42% annual interest every 4 months. Every 4 months, so 3 times a year.
Okay, let me
Oh,
just say that we are recording this. It might get out into the open
Yeah.
also.
So
Again,
I'm
we
not
are
going to mention any
disclaiming
names or
we are
anything.
not
Yeah. Yeah.
asking anybody to invest at all. We're
No.
just discussing, and Brother Stephen is sharing something about very
yeah.
high percentage.
Yeah.
42% is a pretty
Yeah.
darn high. It
Yeah.
has a lot of
Yeah.
risks. We want to just mention that. So what
Absolutely.
you're saying is you borrow money and then you get paid as a broker. See, you cannot really raise money and then reinvest with somebody unless you are a broker dealer, from what I understand. FINRA comes into play, and then SEC comes into play. So all these, because I want to qualify that. But how do they make money, Steve? What did
They
you pick up?
Uh,
Yeah.
they
yeah, yeah.
invest in huge projects that are going to make 100 to 200%, and they do a lot of other little things along the way. So
I'll
they,
be very wary about
I
those,
would be too. But what are
I
the
mean,
questions?
yes. Huh?
What are the questions that I should be asking? Is what would be my
How
How
can they
could
pay
you
you to
pay
borrow their
somebody?
money?
pardon?
How can they make money paying you to borrow their money?
Yeah.
So what they like to do is they like to. Yeah, I'm a little slow on this. Let's just say that you got $1 million house. So they take that
Mm.
4 million that you gave them. They pay cash for the $1 million house. Then they can do a 5-day HELOC, get 80% out, and continue that. Invest that in oil, other bennies, whatever. They invest it wherever they want, and then they make their money that way. And then
Hmm.
they can sell the house later on or rent it out or whatever.
That sounds like a Ponzi scheme.
I know.
If you are taking money from
Coins, looks
somebody
like.
and getting new investors to pay the old investors, you mentioned something about 42%. I'll be very leery about it. Very leery about it. There's no free lunch. Actually, somebody even talked to me about it in Phoenix or wherever I went to. She says, Vinny, we're going to pay you this much per month. And I just walked away. I said, that's what my thinking was. Yeah, I said, no, I don't want to even know about it.
The
You
one the
know,
one thing
if
that,
she
that
was saying they're going to do Forex, though, you said something else. They were doing all these derivatives or something about currency. That's what I
Right.
remember.
yeah.
Forex,
The
Forex,
thing that intrigued
mostly.
me was
Huh?
that they said that you only had to leave your money in for 120 days. And if you wanted your money back, you got it all back. Plus, you got at 42% annual, that would be 14. You'd have been paid 14% on your money. And you could take it out, or you could do it again for every 4 months. You've got the option of still going, or I don't know.
Oh, wow. Wow. How
Uh,
reliable. How reliable. Did you do some due diligence,
I
Steven?
talked with a couple of people higher up in there, and it sounds legit. But Vinny, if I was talking to somebody about assisted living, how much could you BS me and me not know? Right. So I don't. That's why I said, what are the questions that I need to know to ask?
I'll walk away. To be truthful, when people start talking those kind of things, I just don't want to even, get into it because there has to be trouble somewhere. How could you make, if people cannot make 7% cash and cash, right? How can they make 42% to give you or anybody? They need to be making hundreds and hundreds, maybe derivatives or this forex, which I don't understand, or fluctuations in the gold. Somebody told me too. They said, "Oh yeah, we do day trading on the gold pricing and all
yeah.
that." I
They
don't
invest a
know.
lot into all the regular investments, oil,
The
buildings.
oil is also very risky. I don't know if anybody
I
is
get a
invested
paycheck every
here.
month from my oil
Yeah.
stuff.
Oh,
So,
you do.
yeah, it's with Biden in, it's less. Let me just say that. But uh, I still, with Trump, it was great. But
Got
anyway,
it.
they do a lot of investing. It's not, but they're investing on a larger scale, and
Yeah.
it's only 120 days that you leave your money in, and it can go down to as low as $20,000. But I just used Dave as an example just because I wanted to just.
Sure. I would say that definitely
Hey,
everybody's got their own risk
uh,
profile, and
uh,
you want to be very careful who you're giving money to and how you're going to get it back, or if you ever get back, and what's the legal paperwork
Yeah,
and
they do a
everything, right?
promissory note and all that kind of stuff. So
Yeah.
I just
Susan, can I hear anything?
it's something that you guys haven't we've never talked about in a year and a half,
I
two.
know we shouldn't. We
Uh,
shouldn't because I think this is something that one should definitely, if you're interested to do research. I just feel like it's a hard-earned money of our investors and ours. So let's just rightfully look at assets which make good, solid sense to us. That's the key thing, right? Even stock market and options. Some people are really good at options, covered calls. I'm not. So I don't do that, anyway. But let's talk about some other stuff in the sense apartments. Apartments is the big thing. Airbnb are great too, by the way. If you want me to, we keep on talking. Pramod, one of my students, just gave me his presentation. He did it for me, and he did two Airbnbs. I might have mentioned about him, but I will see if I can find it for you.
The
Uh,
problem with Airbnbs right now is it's an
sure.
overly saturated market.
Yes, yes.
Hotels have come back very strong
Mhm,
because the
mhm.
whole concept behind Airbnb. So
Yes.
unless you've got a nice, unique oceanfront or something very, a mountain cabin or something. Unless,
Mhm.
but if you just got an Airbnb in the regular city, there are a lot of problems. They're not getting rented, and so Airbnb is the concept was really
Uh-huh.
solid, where you rent a place,
Mhm.
stay there, and you got all the amenities of home. Then they started saying, "Oh, you got to strip your beds. You got to do all this work." It's why am I paying a cleaning fee if you're having me do all the cleaning? And
Yeah,
so,
yeah.
it's really gotten expensive, and the cleaning fees have gotten expensive, and it's no longer less money to stay there than it is to rent in most cases than to rent hotels. And so the
Mhm.
hotel industry has come back very strong. Airbnb put a hurting on the hotel industry, but then there just was so many people deciding they could become a gazillionaire in Airbnb, and like anything else, too many
Mhm.
people overpaid for property. A lot of those single families, it's the old single family problem, is what it is.
Mhm. Mhm.
Now, if it's again, it's very different if you have a vacation property, um,
Yeah,
an actual vacation property, like you're buying that marina or you bought a marina.
yeah.
Places around a marina or around water, they do great. Vacation properties always do well.
Always do great. Yeah.
So,
Yes. Yes. No, I agree with you. But I think, again, once we find a good rehab, I wanted to share, I'm still trying to find it, but you're right. Again, every opportunity has its ups and downs. Of course, understanding it, and just like you said, Dave, tourism, right? Near the tourist place where the people can rent it. I think Airbnb, they say if we can rent at 50%, we break even or something. And then 60, say 75, you make a lot of money there. But no, and also what's the other thing is the restrictions. Lots of towns have a lot of restrictions as to how many days and everything you could do that. But I just was impressed how he renovated it and things like that.
so I will
I don't
tell
know.
you, there is a unique opportunity that is going on in Florida right now that really
Oh,
I don't believe a lot of people know what's happening. So the
share.
condominium associations they've really and I'm talking high-rise condos,
Hmm.
all from you could go from Fort Myers all the way across to Miami, north to Vero Beach, and these condo associations, they got hit with massive insurance increases. I'll give you an example. My mother and father-in-law, they live in an or a condominium complex that's on the ocean, very nice up in Cocoa Beach area, and
Oh,
last year their 2022 insurance for the building was $19,000. Their
wow.
2023 insurance was $250,000.
What? Wait
Now
a
this
minute.
is for the whole complex.
But
And
19 to 250?
yeah, and it's happening.
No.
Oh yeah, it is happening. So what happened in 2023 was all of these condominium associations put these massive, you have to, what do they call it? Assessment. And so a lot of people didn't pay the assessment because they couldn't afford it. It's in a 40 or 50 unit apartment or condominium complex. Um, some have a lot more, but they had 20 or 30% of the people not pay their assessments. So the condominium association foreclosed. The problem now is the condominium association owns these units. They can't rent them because
Ah,
of their they can't rent them because of their own restrictions that they have in place because of their own rules. And so a lot of these places are becoming vacant. Like you have entire condo buildings. So what some savvy investor, maybe that could be us, what some savvy investor needs to do is to buy those buy the association and buy all the condos and then convert it to apartments. See, because once it's apartments, now you have rentals. See, a lot of these condominium associations do not allow any rentals. They might allow one tenant every 13 months. So if a tenant wants to do a 12-month, they can't. They have to do a 24. What's hard to rent that way? They've made it very hard to rent. So once you could take these beautiful condos and turn them into apartments, you could probably get $3,000 to $5,000 a month of rent on them. Now you'd have the money to be able to pay the insurance because you one landlord and you would control the entire asset, and you can probably buy these assets right now for pennies on the dollar. And the conversion is not that big of a deal because most of these units are well kept. So
I'm curious how you can change the name from condo to apartments. What does that detail? What does that entail?
You have to buy the association, and you have to buy
it's
all
the
of the
HOA.
Yeah, you'd have to buy 67% of the condos.
I see.
At least 67%, but I would think you'd have to buy them all. You'd have to buy the condos 67%, and then buy the association as well, because now you're buying the thing that controls the asset, which is the association. You have to buy both. And it's the only way you could accomplish this. Is it a legal? Yeah, you're going to spend a lot of money on legal fees. The county's not going to care if you rezone it.
Yeah.
They know they're sitting on an asset right now that is undervalued because it has vacancy.
What's your investment on the price tag for doing that?
To convert it? It would depend on the asset, and you might be talking a $50 million acquisition. I know that Grant Cardone has done a couple of them already.
Has he?
Yeah, he's not telling anybody about them, but I know he's down there in South Florida, and he's done a couple of condo to apartment conversions because
I think it's illegal paperwork or something like that, because all you're doing is you're buying the interests of all these condominiums, just like you said, Dave, right? All of them. And then you're buying the association, which is put in place, and then dismantling it, because now it's going to be individual apartment, for example, or unit, which will be able to rent out and sell even, maybe. I don't know. It's just possible that you could even sell. Condos were designed to be sold, actually, not rented. Right.
Yeah. In New York City, you buy an apartment, you don't buy a condo, but it's like a condo association. Whereas in Florida, if you own the entire asset, you run it like an apartment complex. You got expenses, you take that out of the revenue. But if you do some preliminary number crunching and what the rents of some of these would bring, it's just crazy the amount of rent that they would bring in versus you're talking somebody would pay. These condos at one time were worth $2, $3, $4 million for one condo. Today, they can't even sell them. If you go on Craigslist and you look at for condos for sale, just Craigslist. There's many other places. Condos for sale in South Florida. There's a lot of listings. It's look, just take over my dues. The dues are so high.
Dues are so high. Dues are so high. Yeah.
And if there's an assessment in place, sometimes it's, hey, I've got to pay this $50,000 assessment. So you have to pay $100,000 to the association to buy the condo. You got a $50,000 assessment, and then the dues are $1,600 a month. I'll give you my condo if you'll pay all that stuff. But then you're going to be in the same boat as they are. That's why they're wanting to get out. So
sure. I know we did talk about restrictions. We are just covering all different possibilities.
That's all for this episode of The Investor Impact. Stay tuned for the next episode and don't miss out on the opportunity to learn and grow alongside this powerful inner circle.